What's going on, guys? Bryant here. Today is Monday, March 25th, 2024, and this is a recap to last week's price action, more specifically the FOMC announcement that happened on Wednesday. I love doing recaps on the FOMC announcements because price action tends to repeat itself around these types of events. It's pretty predictable because we have a calendar. We know when these dates happen, and we can always go back and watch these videos in the future to kind of refresh our memories before the week starts in terms of how we're going to approach it. So what we're looking at is just my quad chart with the SPY, NASDAQ, we have the VIX, and then we have the Russell down here, the IWM. And if we were to just, before we dive into the SPY specifically, if we just take a look at the start of the week here, we can see that something was pretty significant. The market ended up gapping up after last week's major monthly options expiration. It was quad witching, and a lot of in-the-money calls were released from the options chain, and we had this little bit of a gap up here, which was pretty significant. This already was pretty impressive for the markets to hit the quant trading app sell zone. We see it also happened on the NASDAQ. We can see that the Russell was pretty flat. So before the week even starts, this is a good way to assess how are you going to approach things. You guys know I shared a trade right here on Monday. We'll be getting to that a little bit later, but this is the trade specifically. This was a monster of a trade. I used to dream of being able to take these types of trades when I first started out trading. And then when I started trading complex options orders, I used to love trying to be able to get these type of very high asymmetrical type of risk to reward type of strategies. You guys can see the risk to the downside was very small relative to the gains to the upside. Again, we'll be breaking that down in a second. So just to be able to share these types of trades very casually and with having confidence, not even needing to micromanage the position and stare at the charts all day. The trade was opened here on Monday as it was shared in the Quant Trading App Discord, targeting this region here later in the week, and you guys can see how that ended up working out. This is just compounding some of the information. If you've been trading Quant Trading App for a while, you guys already know when these key levels are hit early in the week, a target becomes 2 sigma. It's very likely for that strike price to be hit. What we have here is the VIX. The VIX was elevated relative to the previous week. We can see right here, there was a little bit of a explosion last week. It actually started off the week pretty high. The VIX had a little bit of a collapse, and then it ended up increasing towards the end of the week. So at the start of this week, again, just glancing at these 4 charts, and we're going back at the start of the week, right? Boom, boom. Look at the amount of information we have at our disposal. We have the Russell is flat for the past few days. So the Russell is diverging from what the SPY is doing. So the SPY is up pretty nicely. The NASDAQ is up pretty nicely. The Russell is flat, and the VIX is still higher than last week's low. So there is, in theory, or we can be thinking at this time, there is still time or room for the VIX to revert back to its lows, because it's always going to look to decrease, especially once there is a catalyst on the horizon. Once that catalyst happens, we know what happens to implied volatility. It's more likely to decrease because the event has occurred. Implied volatility is going to be high before the event because there's going to be a lot of speculation. Once the event happens, in this case here, this is Wednesday at 2 p.m. Eastern time. Once the event happens, we can expect implied volatility to decrease. So if implied volatility is higher than the previous week's low, we can at least expect it to go back to the previous week's low. So that's just at the start of the week. Again, we don't know what's going to happen at this point. We're still talking about at the start of the week here on Monday, but there's so much information at the start right there. So in this case here, this trade, 10:24 a.m. Eastern time, that's right when the SPY had broke its level here, the Quant Trading App weekly resistance. I'm actually going to switch over to the SPX because you guys know I use the SPY to analyze the charts, but we'll also look at the SPX, and I place most of my trades on the SPX options. So this is when, at this point here, the interest to target this strike price up here immediately popped into my mind because we broke the Quant Trading App weekly resistance. I'm paying attention to the implied volatility, the VIX. I'm paying attention to what's likely to happen after the FOMC announcement. I'm also paying attention to Gamma, as we'll get into in a few minutes here. But let's actually just jump to the Discord. So we have, this is the start of the week here. Again, we have our calendar. So we know at 2 p.m. Eastern time is the FOMC announcements. We know Fed Chair Powell is always going to talk 15-30 minutes after the event. And then we also know he was scheduled to talk at the end of the week. So just at a glance, we have these jobless claims right here, pre-market Thursday. These are a few things on the horizon, so we can kind of map out an idea or framework for the week. I want to jump into now. Let's take a look at this right here. So, the reasons for taking some of these trades, let's just jump to, here we go. So this is 1026. Here's the trade. Just opened this broken wing butterfly. At this point, it was a debit of $1.85, and I'm targeting 250, which is right here, so 5,250, but went a little bit further to give the trade a little bit more room, because usually whenever we're targeting, you can target 2 sigma, but when you're trading these broken wing butterflies, you can always go a little bit further, because even if you're buying the butterfly here, as price is increasing towards the strike price, you're going to be profitable on the journey up towards that strike price. So you can actually go a little bit further just to give yourself a little bit of room. And if we were to just jump back to this, later in the week also ended up purchasing some SPY calls right here at this point in B as I was breaking down and answering a trader's question. So here we have this right here. So this is at power hour, so 15 minutes just before the market close, grab some SPY calls. So let's take a look at the chart. That's at this point right here. Now, why will I buy some calls at this point? We'll jump into that in a second also. If we were to come back to my notes at the start of the week right here, I think this is pretty important. If this is your first time, learning anything about gamma exposure, or you're new to quant trading app, I highly encourage you guys check out this video right here. As I shared at the start of every week, I like to kind of stress the importance of creating a blueprint in a sense for the week in terms of plotting very significant gamma levels on your chart. You're trying to put aside any type of bias, what you think is going to happen. The point of being in quant trading app is to try to speculate, in my opinion, as least amount as possible. The whole reason why a lot of these tools were created is that you don't need to guess, so you don't need to kind of predict where do you think support and resistance is. We can just take a look at the key options information and plot the levels right on our chart. So I don't need to guess if 515 is an important level for this week. In this case here, it was. The options chain is telling us 515 is an important level. These acronyms are just things that I've kind of come up with to abbreviate if you are unsure what they are. This is the video I'm referring to, but you can always come to the videos tab right here, or you can just search on the YouTube channel. If you're just watching this video on YouTube, you can just click this pin section right here and just scroll to this video. And this is the one in which I'm referring to. Again, it's available on YouTube. So anybody watching this video on YouTube also has access to view that video, but it is how I like to approach every single week. I do my analysis from the gamma exposure tab. So if we come here, this is the advanced gamma page on quant trading app. I'm just plotting these levels. These levels are not up to date right now. As you guys can see, it's almost 2:30 in the AM in the mornings. So the market is not open yet. And during pre-market, in a few hours, I will refresh this page, get the up-to-date information, and then I will sometimes also check it after the market opens just to see if there's any major changes. I usually will take a screenshot of that, and that's what I share in my notes right here at the start of the week. So first I draw the levels on my chart. Then I share the screenshot so you guys can see it also. If we were to open this in a browser and we would come right here, we can see what is 515. It is this strike price right here that has the highest positive gamma. It is also the strike price that has the highest absolute gamma. More importantly, what I'm seeing right here is a lot of call open interest. And actually, this is a lot of total open interest, and this is a lot of call open interest. It's just shifted because I must have clicked this, and then when I clicked it back, it didn't realign itself properly, so I apologize for that. But usually these would be lined up appropriately with what we're seeing right here. So this is the put open interest, this is the call open interest, and this is the total open interest. Again, this is a screenshot, so I can't change anything here. It is what is shared directly at the start of the week, so that way you guys can go back and kind of assess for yourselves and learn what did you miss. Here's an example. I think this was the actual screenshot in which I shared from pre-market, and you guys can see right here there was a lot of total open interest, there was a lot of call open interest, so this was important and I clocked this. In terms of clocking it means just I took note of the fact that there was a lot of call open interest and a lot of open interest in general up at that level. Now if this was any normal week, I wouldn't really pay that much attention to a strike price that far away. But why paying attention to the strike prices up here was important is because this was not a normal week. This was a week of an FOMC. And if there's ever a time when the market does a larger move than it normally would, it occurs whenever there's some sort of a catalyst, or it occurs during earnings weeks. And it occurs during some of the major earnings weeks. So in this case here, we had the FOMC. It's usually the FOMC, the CPI weeks, or the week of Apple, Google, Amazon, those earnings. Even Nvidia earnings will be the types of weeks where the markets can break past these 2 sigma levels. If there's not any type of major significant news, or the market isn't in some sort of major recovery, it's not likely that the market is going to close or even break past the 2 sigma levels. The data is there within Quant Trading app. You guys can just click this open, high, low, close table, and you can pull up previous years and see how many times this level has actually broke. You can also see how many times has it broke this level on a Monday, and then you can actually check for yourself to see how many times does it go up to the 2 sigma strike price. In this case here, we had a lot of confluence targeting this level up here, and that's what got me excited to actually share this trade for you guys, because I knew this is going to be a very high probability type of winner. And again, the debit was only $1.85, so that's risking $185 to potentially make thousands of dollars. Obviously, depending on the size you traded, the maximum profit was $2,800. That's if the market pinned exactly here at expiration, which was the Friday. But this is the track record of the trade, so about $150. $330, $700, this is per lot. So for every one of these purchased, this is the type of profits here. And again, when I first started trading, I used to dream of being able to have these type of risk to reward, these type of asymmetrical, high convexity type of trades, because these are the types of trades that will really bringing a lot of P&L for yourself at the end of the year if you know how to be patient and wait for these types of opportunities. I know a lot of traders will scalp all day long and, kind of dig themselves into a hole sometimes and then have a really great day. And then at the end of the week, you might have taken maybe 50 trades and you, in a sense, might not have really gone that far, versus being able to spot what type of opportunities are in front of you. Because even if this trade did not work out and the SPX just tanked and it went down here, for that $185 risk, even if, say, you're in, 4 of these or so, we'll just average it out and say you're using about $1,000 in risk to potentially make maybe $3,000 to $6,000. There's a lot of opportunity here to take this trade multiple times throughout the year, because the opportunity is not always going to be there. This type of situation might only come up maybe 3 times a year. I think there's about 8 FOMC announcements, and maybe only 3 times this may happen. Again, it has to be the right mixture of ingredients for this to happen. The key takeaway is, how did we start the week? The fact that we broke this weekly level already on a Monday, and there was a ton of gamma up at this level, and there was also a catalyst for this week. Those are the ingredients that you want to take note of. If we were to switch back over now to the SPY, and I'm going to put on my GEX levels that I plot out, and let's turn off all of the studies and let's take a look at this chart right here. So this is the levels plotted right at the start of the week. Again, if we were to just jump to my notes, it is these levels right here. I don't change anything. In this case here, I just added this dash level just so we can see that this was the top of the absolute, gamma strikes. Again, if you're new to this, the video that I referenced earlier breaks down exactly what I'm doing at the start of the week. Now, we have a strong level right here as 515. The expectation would not be for the market to just gap up and then break through this and just keep going straight up. That's highly unlikely. The market is more likely going to retrace, or it's going to consolidate. So if it was to go straight up to this level, it would probably consolidate for a bit. If price was to be consolidating over this level for the whole day, then the expectation would be we're probably going to go to the next highest positive gamma strike within the next day if there's no major catalyst on the horizon. In this case here, there wasn't really much on the calendar for Tuesday. So if that price action happened, my expectation would have been this level to be hit, or at least 519 to be hit the next day. But knowing the catalyst was for Wednesday is why I gave most of the trades, the expectation that it will take a few days to happen. So I just targeted Friday, and then for the long calls on the SPY, I targeted Monday. If you are nervous and you don't want to take a type of trade like this, now notice first of all, the broken wing butterfly, it has that type of structure where this is the massive profit window, and then down here this is the low risk zone, and then there's risk obviously to the upside if the market was to go much further. But the worry of the market going that high is very limited because there's almost less than 1% of the time. So maybe, out of 1,000 times this might happen, maybe 1 out of 1,000 instances, you might see the SPX the SPY will break past, the SPY will break past, the 2 sigma strike. It will break past a high positive gamma strike, another high positive gamma strike, and then break past another high positive gamma strike, and then close all the way up, some ridiculous level. That has, last time that might have happened might have been 2020, and we know why that would have happened. It was a very statistically not normal year, so that isn't really much of a concern. And then again, the market will have to pass through your zone of profitability before it gets past here, which means you have plenty opportunity to take profit. There's a lot of time to take profit before the SPX would have had to go all the way past here for you to be in the red, and we're talking about starting the week here. So if you're not willing to take profit on, here, then in a sense you're just mismanaging the trade. So again, the concern of this loss up here isn't really something you're that worried with when you're opening a spread like this at the start of the week. Now, the thing is, if you miss this opportunity here or you're nervous, let's jump and take a look at what other opportunities we have. We have the NASDAQ here. Here's an opportunity in itself. It comes right back to this support level. If we take a look at the IWM, where's the IWM on Tuesday? It's right in the buy zone. This is an opportunity for a 5 to 10x type of trade. So we're talking about 1,000% return, or at least a 500% return whenever one of these tickers in quant trading app goes from the buy zone all the way up to 2 sigma. So look at the possibilities that you can spot right here. The NASDAQ comes back to a support level. We have the IWM is in the buy zone, but you guys already know I love the 50% retracement. So if we were to just turn off all levels now from our chart, and let's draw out our retracement. So from here, from last week's low to what would have been this week's high, what do we have right here? Right within this golden zone, this 50% to 61% retracement. Everything else is turned off on my chart. There's nothing else fancier on this Fibonacci retracements. Again, the only thing I pay attention to is the 50 to 61% retracement when I'm interested in buying or being long. The same thing if I'm trying to take a short position, but this video is about being long. Here is the trade here from the low to the high, and then price retraces right back in here, and then we just wait to see if buyers start showing up. Once we see buyers are showing up and price breaks back above this 50% retracement, there in a sense is your entry, targeting back up to here on a normal week. But because this is not a normal week, we're targeting at least 520, which is a high positive gamma zone, or 525, which is all the way up there on the moon. But look at this beautiful 50% retracement right here for an extension with price going much higher. These are the things that you want to take note of. And if you're not distracted and paying attention to a million different things, it makes it very easy to sit back because you can contextualize what to expect for the week. On top of that, we have a lot of negative gamma in this region, so that's why I just draw this rectangle around here. This is all of our positive gamma. And what do I repeatedly say about these zones? Don't really look for short trades while price is in these high positive gamma territories. Let it break back below these positive gamma territories. Let it get into these negative gamma territories, and then you can expect price to sell off to the highest negative gamma. When price is in the high positive gamma zones, you can expect price to move from one high positive gamma strike to the next high positive gamma strike. That's what P1 is and P2 is. P1 is the highest positive gamma strike. P2 is the second highest positive gamma strike. Those are the type of expectations you can have. These are our high call open interest, and this is the high overall open interest for this week. So that's why when you're contextualizing this, it's not that far-fetched to have these type of really far out of the money expectations. This purple area here is just the overall high gamma, absolute gamma nodes on the profile. I like to map those out. Now, if we were to actually jump to the day of the FOMC, I want to point something out right here. So this is 10 a.m. This is the 20th, which again is this day right here. You guys can see the date up here if you're not using Thinkorswim. So this is the 20th. This is in the morning on that Wednesday before the FOMC announcement. I was explaining to a trader about looking at the gamma profile for the day and what to kind of expect in terms of the volatility. You guys can see in the background, the purple is the absolute gamma, right? And this is just the 0 DTE. All that normally a normal expiration, let's just say if there's not, a lot. Let me see if I were to actually turn this on. Okay, we're taking a look at the SPY here, and again, this is just this week's aggregate, and this is not entirely accurate right now because, as I said, it's 2:30 something in the morning, and the options market, the options Greek, is not up to date yet. You guys can see that if I were to draw a zone around the high absolute gamma nodes, it is. Let me turn off the net GEX here. You can just glance at this and see this is where I like to just think of this as a cutoff, and I'm just eyeballing it. So anything below this level, in my opinion, is not a lot, and it's relative to this week, because another week the profile will look completely different. But for this week, I'm just going to say this looks to be the baseline, and anything above this is pretty high absolute gamma. So this range from here to here, this is 525 down to about 520. That is my absolute gamma range I'm just going to tell myself for this week. So in this case here, when we head back to the Discord and we're paying attention to this, I'm just marking that it looks like there's a lot of absolute gamma here, obviously anything above it, I'm not even going to point that out because it's obvious, but here, we have here, all these are kind of relatively high, versus you guys see how the absolute gamma just kind of drops right here, and then it just kind of drops right here. So I'm kind of just drawing a range around the absolute gamma. And what I've noticed, or anyone that's been using this for a while, I'm pretty sure you guys have noticed this too, price will move pretty freely around these absolute gamma strike prices. And I've kind of stated, if you think of it as like their tracks, the track has been laid for price to fly up this way or for price to drop down this way. Now, as price is above the 0 GEX line, which is right around here, how do I know? This is the price when the positive gamma turns negative. So you guys can see right here. So right in this region, it's pretty clean. We have 3 nice little small positive GEX strikes, and then we have 3 nice small negative GEX strikes. Right in between here, right in this zone, is going to be where the gamma flips from negative to positive or from positive to negative. In this case, the net GEX is positive. That's why this is green. That's why everything is green here. When it's negative, this number will turn red. These bars will also turn red, and that will let us know that the overall net GEX is negative for whatever expiration you're looking at. In this case, we're paying attention to the 0 DTE. So in this case here, this region tends to act as some sort of support, because for the SPX, the net GEX does not want to go from a positive to a negative. It generally wants to remain positive. Think of it like a temperature for the market, or think of it, as a temperature for a human. A certain temperature, if we get too hot, it's not great. If our internal body temperature is over 102 degrees, we're going to say we have a fever. If it's over 105 degrees, that's terrible. If you rest for a bit, your fever will come down, your body temperature will drop back below 100 degrees, and then it should stabilize around 98 degrees, 97 point whatever. Everyone's different, but for the most part, for most of us, there's a level or temperature for all of us that we can all agree is healthy for a human. In this case here, for the markets, that temperature likes to remain a positive number. So if we see it dipping negative, it's going to defend itself for a bit. And obviously, if it loses this level, I like to think of it as this way. I like to use the analogy as it's almost like the market is sick, it has a fever if it's negative, and if it's in this region here. All right, so hopefully that explanation made some kind of sense. Again, it's pretty late here, so I'm not even entirely sure if I'm making complete sense with this video right now. I just figured this week was a little too important to glance over. It's been a few weeks since I've actually put a video out on YouTube because I'm working on something huge for Quant Trading app, and I've been very locked in on trying to get that completed in time for April. So that's why putting out these videos had to take kind of a backseat, as I had to prioritize time management. At this point, I'm also a full-time quantitative developer, which means I'm coding essentially non-stop. And that's obviously going to eat up into the time of creating these types of videos. And this is the only time I actually have to even get some sort of a video like this done. But again, this is important with the gamma profile. If we take a look right here, here's our zone, right? So 52, we'll say 225 and 230. If we jump to the SPX and we take a look on that Wednesday, where did price, in a sense, go all the way up to? Where did it stop? Let me just mark off right here. Here's our high of day, right? Right around 226, 225, we'll say. And that came right here. Here's our 225. So again, this is early in the morning. This is 9:55 Eastern time. So 25 minutes after the markets opens, this is the 0 DTE. We're trying to get a gauge how far can the market go for today. It's likely going to want to head up to around here to here, but no further, because at this current point, the absolute gamma was not really showing much. Now, it doesn't mean it can't go higher. We're just trying to speculate or get some sort of an idea and gauge for how far can price move. At the same time, if price was to drop, it was likely going to meet some sort of support here. If support broke here, it was likely going to want to drop, probably consolidate around here for a little bit, because we can see a ton of absolute gamma here. If that level broke, it was probably going to want to hang out in this region. So just looking at one metric, absolute gamma, and just drawing an idea. Again, I'm looking at all these high spikes. This is not normal to see the absolute gamma nodes, dispersed so evenly on a day like that. The reason it looked like that, again, because that was a specific type of day. It was the FOMC day. So let's actually just turn back on our studies. Now, what else do we have on our chart on that level? We have confluence right here. We have the weekly resistance level. Now, what happens when previous resistance breaks? So here comes our resistance. It breaks, it acts as support. And if price comes back down to it, it's likely to act as support. So we were just taking a look at the absolute gamma, and we already said 165. Here's 165. Well, 166, but we'll just say 165 is also in this area. So this whole area, our gamma profile is letting us know that this is an important region from the gamma profile. We also have other tools to let us know that this area is an important area, and you guys can see what happened with price. If we actually were to, I'm going to pull open, let's actually open this one here. I'm going to put the SPX on this one. Actually, I'm going to put the SPY, and then I'm going to turn on the dark pool script. So let me just come up here. I'm going to delete everything, and then I'm going to just throw on the QTA dark pool script, apply, okay. So this is a free script, FYI. If this is your first time seeing this, it's available for anyone in the Quant Trading App Discord server, even free members. And this script right here is showing us this is the highest dark pool region that Quant Trading App found for that day. So the script is sent out to the Discord at the start of the day. So let's just head to the public, and we have the alerts public, and here we have it right here. Here's the dark pool script. It's sent out a couple hours before the market opens. You just click this and you copy and paste it into your Thinkorswim platform, and it plots these levels. So on this day here, again, at the start of the day, we already are aware that there's a lot of potential liquidity. We're aware of a lot of transactions occurred in this area, and if price is above it, we can expect it to act as some sort of support. So we have confluence from the dark pool script. If I were to turn back on the weekly, right, boom, we also have, here it is. So now we have our gamma profile from the SPX, we have the dark pool, we have the QTA weekly level here, we have a break and a retest here, price action showing us the same thing. Let's actually head back over to the SPX, and let me switch over to the SPY. I'm going to turn off my studies again, and we're going to pay attention to our gamma profile from the start of the week. We have 515, also letting us know this is a significant level. If we were to zoom in here and we were just to pay attention to technicals, what do we have right here is the flat top breakout. So here it goes. Here's one person is going to call this a bull flag. So here's our pole. Here's price consolidating as our flag. Price breaks out. It retraces back to the breakout of the flag. This is also called flat top breakout for some traders, as we can see if we draw it this way. Price pushes up, there's momentum, it consolidates, and then it breaks out, and then it comes back, retraces, and then it pushes higher. So depending on, if you're a technician, you're going to analyze it that way. If you are a gamma enthusiast, you're going to pay attention to it from a break and retest level. If you are a momentum-based trader, you're going to analyze it and say it was a bull flag breakout and price retraced back to the area of consolidation. There's also going to be a point of control here. If you use the volume profile, there are so many things screaming at you to tell you that this is an area to potentially be long with a stop loss below here. Because if price did break back below this level and retrace to here, it probably would have gone lower, because now this is a significant level that was not defended and would have broken. But for the most part, we're not in the business of trying to predict what's going to happen. We don't have to predict that price is going to go down. We can see prices already above this important level, which means bulls are in control, and bulls are going to look to defend this control. Now, Catalyst comes out. I don't entirely care or know what the news was. They said whatever about interest rates, whatever was said. All I know is price went up. 515 was never entirely broken. It was defended the entire time. Volume came in. There was a lot of options activity happening around the 515 strike, and we had a clear shot up to the strike price we were monitoring from the start of the week. If we were to take a look at now, looking at the option, the 525 call, I'm actually going to pull that up right here. This is on the Tuesday. As I grabbed the call, my average was around 39 cents. And then taking profit right up here, as you guys can see, well over 225% return. For anyone that was paying attention earlier, this is the 50% retracement. At this point, these options are going for 20 cents. 20 cents up to $1.40. That is a monster return on a trade. This right here is 600 and something percent. And we're talking about 20 cents. That means you can grab 5 of these only using $100 of your capital, with the opportunity to make over $400, $500, sometimes $600 in these types of trades. I went with the Monday expiration just because of theta. I didn't want to be in the same, Friday expiration, because knowing after the event was going to happen, the implied volatility was going to get crushed on these Friday options. Theta was going to kick in. I'm not that type of trader likes to take that type of risk, so I just went with the Monday expiration. I kept it easy. It was already bad enough that I was going so far out the money, and out the money options get hurt really bad whenever there's a pullback in price. If you're in calls and price pulls back. I didn't share this, but I was also in the 515 calls. Sometimes I like to grab at the money calls or in the money calls. And the out the monies I would consider, the lotto trader. So either that was going to work out or not, but there wasn't really that much risk on the trade. The main trade for me was that broken wing butterfly. And to kind of come around to the conclusion of this video, yes, you can trade a butterfly like this and just make it balanced, and you can have keep it pretty cheap in this case here. But I like to go with the broken wing butterfly because you can get a little bit more creative with the trade. Because in this case here, if we take a look at this profile, you guys can see right here, this is a really far out the money cheap butterfly, and the risk to reward profile is inherently going to be good because it's so far out the money. But if I were to just pull this in right here, the thing that if you're just trading a balanced butterfly, we can already see the debit is $5 again. And if we take a look at this curve right here, it looks it's not that, the convexity isn't strong enough for me. If the price was to just make a slight move. Obviously, if price was to go all the way up here, the convexity is nice. It has a nice slope. You're not really risking that much to the downside relative to how much you can make to the upside. But if you just make it a little bit more of a broken wing, right, and you go a little further out, so I'm going to push this out here. I'm just going to make this more of a broken wing. Now pay attention to this. Now, instead of $5, we're looking at $1.70. And look at this convexity. If price was to come down here, we're not really risking that much relative to, look at the slope to the upside. And I really like positions that have this type of risk profile. If I'm making out the money, trades, if I'm taking a bet in a sense that price is going to make a large move in one direction, I like to structure my trades that way because it means if I'm wrong, I'm not really risking that much. And again, we're not really worried about what the max loss is. The max loss in this case here is just your margin. You can think of it as how much margin this is going to require. You're paying $1.70 for the trade. Your broker is going to need you to allocate this much funds for the trade because there's the potential you make that much if price goes way past where you're thinking it's going to go. And again, you have plenty of time in this case to exit the trade. I only trade these types of trades mostly on the SPX. Maybe once in a blue moon, I'll trade it on another individual ticker. But for my style, I like to stick to the index options just because there's no risk of assignments. It's cash settled. It's a little bit cleaner. And this is the type of broken wing butterflies I like to trade when I'm taking, again, very far out the money trades. And I'm going to wrap up the video here. Again, this video, it's a little bit of last minute. Just really wanted to get it out before the new trading week starts here. Showcasing and combining very simple tools, in my opinion. Here's our absolute gamma. At the end of the day, the principles are simple. Price hits a key level. What does it do? It retraces. It retraces back. Even if you don't know this is a significant level, it's our gamma flip. But what do we know about gamma flip? Price likes to be sticky around here. It consolidates usually around the gamma flip. It's also an area of a high liquidity. If price was to go lower this week, it probably would have retraced and it would have come back to this level. If price got back over this level, it would have gone up to this level. If price holds above this level, it's going to go above this level. So that's just the gamma levels. Might be a little bit more advanced. At the end of the day, what do we have? We have strong momentum at the start of the week. We have a 50% retracement, and then we have buyers showing up. We have a technical pattern right here. We have a catalyst on the horizon right here. We have a retest of our breakout level. We have strike prices that we know are of areas of interest on the options chain. You can just take a look at open interest. Quant Trading App has a free open interest script that will also plot the high open interest levels on your chart. There's so many tools available to traders now. It's a great time to be a trader, in my opinion. The thing is, you're just not getting so worked up over these micro time frames, in my opinion. I like to look at the larger time frames. The 15-minute time frame is my preferred time frame for intraday trading. It shows enough context. It allows me not to be micro focused on, if you're paying attention to a really small chart and you're zoomed in something like this, you're going to miss what's really happening on the larger time frame. And obviously, if you're really great at scalping, then keep doing what works for you. If you're struggling with scalping or you're not happy with the type of returns you're making and you would like to maybe spend less time staring at the charts, I recommend using tools like the 50-minute time frame, using spreads that have great risk to rewards, or using spreads that have high win rates is another approach you can have. But just coming up with, try to stick to maybe a plan for the week and hold yourself to maybe 3 to 6 trades for the entire week, and only take the trades that really match your criteria, because you don't need a million trades in a week to bring in great P&L at the end of the month. A few trades like this, I know I'm already excited for the next time, there's an opportunity for something like this, because a few trades like this a few times a year can really make great returns. And for $1.85, if you're in 10 of these, obviously that's a lot. That might be a lot for one trader, but that's how much that's going to cost. And then with 10 of those, margin, obviously that's going to be pretty large for some traders, but that's 10. It doesn't need to be 10. But yet 10 of those is a really nice return when you think about it. $14,000 or so with 10 of these, 3 times or so a year. If it doesn't work out, you're maybe losing maybe half of your debit, so you're losing maybe $850, $1,000 or so. I'm just using 10 because it's a nice, large, easy number to multiply these things by. But that's the point which I'm trying to share. I like to aim or try to target these types of trades, especially where I'm at in my career as a trader, and with the amount of time I've spent trading. I'm now trying to focus on larger type of trade opportunities that have smaller risk, while I dedicate the time to build better tools to help some of the up and coming traders to get them to the point where they can be able to spot these types of larger opportunities. If you enjoyed this video, guys, leave a comment down below, like the video, share it, and I'll catch you guys in the next one.